Ladies and gentlemen, good day and welcome to the Power Mech Projects Limited Q1 FY26 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this call is being recorded. With this, I now hand the conference over to Ms. Arshia Khosla for opening comments. Thank you, and over to you, ma'am.
Thank you, Samir. I, Arshia Khosla, on behalf of Nirmal Bang Institutional Equities, welcome all of you to the first quarter FY26 earnings call of Power Mech Industries Limited. From the management today, we have Mr. S. Kodandaramaiah, Director, Non-Board, Business Development, and Mr. N. Nani Arvind, Chief Financial Officer. I would now request the management to give their opening remarks, post which we shall open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Ms. Arshia Khosla. Good morning, everyone. I am Arvind, CFO of the company. I have with me Sri Kodandaramaiah, Director, Business Development. I extend a warm welcome to all of you for our Q1 financial year 26 earnings call. The performance for the first quarter of financial year 26 was in line with our set targets. We reported a total income of 1,304 crore, marking a 28% increase over 1,016 crore in Q1 FY25. EBITDA stood at 182 crore, up 48% from 123 crore last year, while profit after tax came in at 81 crore, registering a 31% growth compared to 62 crore in Q1 FY25. The EBITDA margin improved from 12.1% to 13.95%, supported by exceptional revenues from Uttarakhand Riverbed Mineral Project, while PAT margin rose marginally from 6.1% to 6.2%, moderated by higher finance and tax costs in the LLP which we floated for Riverbed Minerals projects. For the revenue mix for Q1, in terms of revenue mix for Q1 FY26, the mechanical segment contributed 222 crore, a 117% increase over 102 crore in Q1 FY25. The civil segment, including railways, water projects, contributed 581 crore, reflecting a 7% increase. O&M revenues rose to 398 crore, up 17% from 341 crore. The electrical segment recorded 67 crore compared to 8 crore, a 737% jump. And the mining business contributed 26 crore versus 14 crore last year, showing 80% increase. Other income stood at 11 crore compared to 9 crore in the previous year. The revenue split for the quarter was 95% domestic, 5% international, while the contribution from the power sector remained at 53%, with non-power sector accounting for 47%. On the financial front, return on equity declined from 3.09% during the Q1 from 3.09% to 2.41% due to higher finance and tax costs, which we anticipated that normalization in collection and execution. ROE is likely to improve significantly in the coming quarters, while return on capital employed improved from 4.7% to 5.69%, driven by better capital deployment and improved operating margins. Operating cash flow remained neutral due to pending receivables in the water division. However, we are actively engaging with clients to expedite the certifications and clearances, and we are confident of realizing the outstanding dues in the coming months. Net current asset days, excluding cash and cash equivalents, have decreased from 128 days in Q4 FY25 to 123 days in Q1 FY26, driven by the realization of receivables, which resulted in a reduction in the current assets. We are actively engaging with the Uttar Pradesh government for the realization of pending Jal Jeevan Mission receivables, which is expected to further reduce current asset days. Additionally, with the stabilization of MDO business from 2027 onwards, we anticipate a significant improvement in the net working capital days. As on 30th June 2025, the gross debt and net debt remained controlled, and despite delays in certification of water bills and delays in realization of receivables, As on 30th June 25, gross debt is around 753 crore and net debt stands at 239 crore. The debt equity ratio as on 30th June 25 stands at 0.34 times. During Q1 FY26, the company secured fresh orders worth of 1,270 crore. The total order backlog stood at 53,972 crore. Excluding the two MDO projects, the executable order book is 14,391 crore. We are targeting 10,000 crores new orders by March 26, and as on date, we have already secured 1,882 crore. Our strategic focus remains on the high potential areas, including industrial O&M, railway, and water infrastructure, as well as MDO projects. For FY26, we have set a revenue target of 6,500 crore. With an expected 25% year-on-year growth and a stable EBITDA margins in line with the FY25 levels. Margins could see an upside depending on the contribution mix from O&M and mining segments. The order book outlook for the year remains healthy, supporting our growth trajectory, with the company well positioned to execute and convert around 40% of its opening order book annually. The MDO business is ramping up steadily, and along with O&M, is expected to drive significantly growth in the coming years. So from the MDO business point of view, our MDO business is progressing steadily. At the Kotre Basantpur project, mobilization of HEM equipment has been completed, and first year of mining operations commenced on 15th April 2025. Till date, overburden removal of 5 lakh cubic meter has been completed, and the work is continuing. Coal production is expected to commence from September 25. Subject to the monsoon conditions. At the Kalyaneshwari Tasra project, OB removal and coal dispatch operations have been ongoing since January 24. As of June 25, coal production has reached 7.61 lakh tons, with the corresponding OB removal of 14.71 lakh cubic meters. Mining fee against the coal produced and dispatched to sale have been accruing since January 24. To date, invoices have been submitted for 7.52 lakh tons of coal dispatched to the existing washery as per sale direction, but with a total value of 158 crores so far we have recognized revenue. In terms of washery and railway siding development is concerned, design consultants have been appointed for both the washery and railway siding. For the railway sliding, engineering scale plan, L-section plan and consent to establish approval have been received, while approvals for overhead electrification and signaling interlocking system are expected by end of this month. For the washery, major equipment designs have been completed and LOIs have been issued to the vendors for some of the equipment, with the remaining order under progress in parallel with the design activities. Mobilization and establishment of the washery site are also in progress. While sales current coal offtake remains below the plan due to the limited external washery capacity available outside, we are actively working to resolve these constraints and ramp up the production in the coming quarters. With this, now I request Mr. Kodan Ramagaru to update on the key business development initiatives and future outlook.
Yeah, thanks Arvind for your introduction and also the overall business area of the company. Thanks for our participants also. I think as Arvind has said, we are looking up into the business opening up substantially. We have seen it is there for the last 2 years, and it continues to happen in the coming years also. Coming to the basic order booking and the backlog what we are having it. I think in the first quarter we had a total order booking of 70 crores with key orders on Telangana, where Telangana Yadadri project we are also building into the quarters, the establishment quarters, about 1350 flats of a value of 972 crores. We have taken a first major step into the green energy business in taking the under the Kusum scheme of ESCON solar project in Bihar for 159 crores. Total value for about 25 years, and O&M jobs also we have taken 9 jobs of 108 crores. These are the key orders there. But beyond the quarter one also, currently also recently we have booked a major O&M order in SJVN, that is 2 into 6 megawatt Buxar, 498 crores for a 5 years O&M operation, and NTPC Jumbo also about 53 crores. For this is the latest two major developments apart from the what we have seen in the first quarter. Now looking into the overall order backlog, taking into consideration the revenue, what has happened into the first quarter and all, or the last year backlog, what we had in 1st of April, 14,387. More or less, the order backlog remains same, about 14,391 crores, with a major increase in the civil segment of the business from 8,472 crores to 902 crores, 6.5%. And in other segments, because in the first quarter we have not substantially added because of the opportunities were postponed later. And these things are expected to come happen. There is some marginal reduction in the overall order backlog from mechanical and installation business from 2,303 crores to 2,081 crores. O&M from 2,749 crores backlog to 490 crores. And electrical, we are consciously looking at the business and stabilizing it. Therefore, we are not looking at in a significant in adding new businesses at this stage. Barring stabilization, it is now 786 crores the backlog compared to 863 crores. The domestic business continued to drive the business with about 98% of the order backlog, and the international business mainly focused on the O&M with a backlog of 250 crores, is about 2%. And the power sector continues to be a lead opportunity provider for the company with over 61% of their business at the beginning of the year. It is now 57.5%. In the first last year, now it is 57.5%, and non-power is about 42.5%. This is on the segment-wise opportunity, and in the case of the key initiatives has been the market has been opening in the power sector and in the infrastructure and non-power sector also. There are a lot of opportunities I have seen the last 8-10 years. The trend is continuing for the our participation in railways, roads and infrastructure, metro works, and then significantly the O&M profile what we have increased. One of the key aspects of the O&M business has been that in fact our total capacity of operation of the O&M business has gone up with 4,107 megawatts with the three major projects in the preceding preceding years. And recently what we have taken is SJVN also 1320 megawatt. That will jack up the overall O&M business to nearly 75,000 megawatts, and with more focus on the power sector, the addition of the capacity, there is going to be a lot of opportunities. Now coming to the key opportunities and the business where it is going, I think we all know there is going to be a revival of the power sector business owing to variety of requirements in another 5 to 10 years as the increased capacity, which I have been telling in many of my previous interactions with you, that with 500 gigawatts of the renewable power adding up by end of the decade, and then there is going to be a balance of the power requirement. 80 gigawatts of thermal power has to be necessarily added, and there is a significant addition into the actions taken by the various companies, particularly Adani, which has got a present installed base of about 70,550 megawatt. They intend to double the capacity to 35,000 megawatts in another 5 to 6 years. And they have taken the lead in adding around recent orders, what they have placed in the last couple of months, maybe including the previous 2-3 quarters. And about 15,720 megawatts they have ordered. And recently also they have taken action on another 4,800 megawatts. Therefore, they are significantly adding up to the ordering backlog of the engineering EPC companies like BHL and L&T. And NTPC is another major organization which has taken the lead, about 11,580 megawatts of ordering which has been done in the last couple of quarters. That also is adding up, and other utility companies like DVC, Neyveli Lignite Corporation, Mahagenco, then Singareni SCCL, then Gujarat State Electricity Corporation Limited, then Chhattisgarh. They are also have taken the initiative and added new capacities. Therefore, if you take about 18 months to 2 year ordering status in the last 1.5 years, and the trend is continuing, about 38,000 megawatts ordering has been done in different areas and different stages. About 10 EPC projects have been awarded to BHEL. And then L&T has taken a major step forward, again coming back to the power sector execution of 4,000 megawatts, 2 projects. They have taken at Navinagar and Gadarwara. And these 2 players will now, L&T also is going to put their pitch in. And the latest information is that Adani perhaps has taken an initiative to order some boiler packages to them, and this news has to be confirmed for the L&T also. Therefore, perhaps they want to slightly diversify the the BTG orders, boiler and turbine, main island ordering package to apart from BHEL also, looking at the overall order backlog, BHEL has taken it. Therefore, if you look at the overall scenario, there has been a substantial ordering of more than 2 lakh crores at about 38,000 megawatts in the last 1.5 to 2 years. That throws up significant opportunities for a company like Power Mech. We are into various segments of the main power plant installation, both in the main plant and the balance of plant area, and offers an opportunity of about 30,000 crores. Now, in these areas, recently, our interest and where we have taken a lot of initiative is in getting into the market with Adani. About 3-4 major jobs we have taken at Mahan, then Raipur, Korba, that is Amarkantak, about 1653 crores of mechanical installation jobs, and then 800 crores of the civil works at Mahan Phase 2 and Mirzapur Phase 1, which they are putting up for the first time, 2,800 megawatts. That comes to 2,453 crores. And all these schedules about 30 months firm price contracts with a fair advance and payment terms. And these projects are already under installation and execution and going on a fast track basis. And the other important development is the BHEL, Kodarma, DVC. We have taken 579 crores in the BTG civil works and the cooling tower work about 743 crores. Therefore, if you look at the power sector scenario itself, perhaps the company has added nearly about 7,500 megawatt of capacity addition presence in the recent times. And this will continue to happen in the coming years also. And then on the O&M sector, what I can say is that we have got a reasonable backlog to continue the order the conversion factor, and the opportunities are going to continue to be there with a new capacity addition of about 6,000 to 8,000 megawatts every year. Both with the private, particularly Adani is going to add a lot of capacities, and other players are also going to add up capacities, and public sector also is going to add up the capacities. With that, more opportunities will come. As I said, the 4,000 plus megawatts have been added to the base strength of the O&M, coming to 75,000 megawatts. Perhaps, with more and more capacity addition, this base capacity of Power Mech has to increase in the coming years, and we continue to bank on the domestic O&M business. And the international O&M business, the main focus is around the shutdown jobs, repair jobs, maintenance jobs, and manpower supply. Actively, we are doing in the Middle East and Nigeria. Nigeria, we are executing a 400 megawatt long-term contract that is being under execution, and then many maintenance jobs we have taken, and that we expect about 300 crores of order booking in this year. Now, the other important sectors are the railways, where we are significantly working in about 8 major projects of 2,500 crores, and having completed some of the significant railway jobs also. And the road sector also, we are working in many projects. And apart from that, one of the key areas of infrastructure business is undertaking the metro works. Metro works, there is a major ongoing investment. 22 cities are have got its penetration. Metro spread is there about 950 kilometers. This is going to develop in the next 5 years to almost 2,000 kilometers with another 23 cities added. And our interest is in all these metro shops is first to work on the maintenance depots, because each of the major metro cities they need 2 maintenance depots. We have got experience in doing many railway workshops with the railway jobs what we have undertaken so far. Major railway metro maintenance job we are executing in Bangalore for the Bangalore Metro Corporation, 427 crores. That gives us the references to it for many of the metro opportunities which is expected in the future. Therefore, in the overall scenario, what I can say is that last year our total order booking was about 6,437 crores. That is compared to previous year 8,758 crores in 23-24, 24-25, 6,437 crores. Of course, last year there were many aspects, mainly because of the elections and monsoon and so many other interfaces. Perhaps this year we are keeping a target of about 10,000 crores. And an area which is of significant importance in the power sector is the business can be opening up in the balance of plant packages. Couple of projects we are pursuing it with opportunities of about 10 to 12,000 crores, and some significant development should take place shortly. And that should see how we can take up that work, and that synergizes with our overall business plan and our expertise also. On a comprehensive basis, we have got a mastery in construction, an end-to-end solution in civil, structural, mechanical, and afterwards post-commissioning, O&M, and also. Therefore, that enables us to be a strong player in this. And we are discussing with a couple of players on this, and then let us see how it takes place. And that is an area which has a lot of interest in us in this year. That's what I would like to say. Thank you, all of you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hi. Good morning, sir. Thanks for the opportunity. My first question is the margin in this particular quarter. Was there any one-off in this quarter?
Yeah. So this is exceptional revenue, sir, because there is the modesty in the Uttarakhand riverbed mineral. There are certain quantity which we seized from the clients where they have to pay the royalty, and we got some quantity they received unpaid royalty. So because of that, we collected double the penalty, resulted in higher profit and royalty. So that resulted in higher profit. So it's a 9 months business. Basically, the riverbed minerals rainy season Q2 probably will not have that much profit. So 9 months only operation. In Q1 we got the exceptionally high seized quantity, resulted more profit in the current quarter.
So what is the impact of that in the current quarter?
So that is roughly around percentage.
Hello, sir.
19%, sir.
So 19 crore, you got the impact in this quarter?
55 crore is the PAT, which comes into 19% EBITDA margin from that particular LLP.
Understood, sir. My second question on the thermal BOP, of course, it's a very large opportunity. But having said that, sir, why there are delays in finalization of a tender? And is this opportunity of BOP, is it available from BHEL, Adani, NTPC, or are the packages being, broken up into small parts? If it is a single package, broken into small parts, the size could be much smaller. Is that the right understanding?
Yeah, I think both the ways it is possible, because what has happened, people like Adani, companies like Adani, they would like to do themselves many things. the main plant, they would like to order the rest of the balance of plant packages, including the civil and other packages. They would like to handle themselves. That is where we are also taken some of the jobs, and what I said, recently we have taken. Now the other aspect is apart from the main plant, that is called the balance of plant, is nothing but the inputs which goes into the main plant for its operation like water, power, and then civil works, and then so many auxiliaries are like coal handling, ash handling, water systems, and then miscellaneous things are there. This is all nowadays combined as a part of a single package. And that is the concept, because main plant is specialized with a company like BHL or L&T. Balance of plant, it is again a specialized multidisciplinary specialization, not only engineering but also in construction in different areas: civil, structural, mechanical, electrical, C&I. So that needs more of integration and needs a proper unified inputs resources. Water is required to start the power plant, then power is required to start the power plant, and other utilities also. They follow both the models. One is to combine the entire package into something like a single package, that is a balance of plant package. Another is to further segment into balance of plant into civil segment, coal handling, ash handling, and individual segments. And that depends on the customer choice and how you would like to get a competitive offer in the pricing to see that his overall investment cost is moderated. Therefore, our interest is in both the cases, because our strength now, because end-to-end construction we are having, we have also strengthened our engineering base. And then with these things, perhaps, BHL also is planning to do this type of BOP in a way that it can be roped in with other agencies. And particularly a contractor like us, we are better qualified to do that. That is how it is.
Okay, single BOP packages available in the market?
Yeah, I think if I look at the ordering, NTPC has ordered 10 EPC jobs. Total NTPC ordering which has been done is about 14,500 megawatt, about 1,13,000. Now this NTPC ordering mostly on BHL and to some extent on L&T. Now the major orders which are not ordered on the EPC mode is NTPC has to balance of plant, about 6 plants they have to order it. That will come for packaging. And Adani, as I said, around 15,720 megawatt, that is entire balance of plant will come as a packaging. Apart from that, BHL themselves have taken a lot of orders. In terms of BHL EPC ordering, as I said, about 1,13,082 crores for 14,500 megawatt. Therefore, this will be some areas, maybe some of the projects can be thought of as a balance of plant package with BHL also.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question comes from the line of Jainam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity. So in the first quarter, we had a low order inflow.
Sorry to interrupt. There is a little bit of disturbance from your end.
Hello, I'm audible right now?
Yes, sir, it is better. Please go ahead.
Yeah. So in the first quarter, we had a low order inflow YY of 700 crores. With the strong pipeline in thermal space and nuclear space, why are the orders not flowing in? Like, is there any challenges or delays which we are seeing?
I think that is a typical of first quarter and second quarter. If you look at last year, first quarter also it was 1,040 crores. This year we have taken it at 1,270 crores. Now, the opportunities, what we are tracking in various things, various business segments is more than 30,000 crores. And then the power sector, there is an opportunity of 30,000 crores. And then there is an infrastructure set, countries' investments are coming. We have seen the annual investments in what is happening in the railways, roads, and then metro jobs are also. Generally, the trending of any customer is to start the ordering in beyond the second quarter. That is how the order gets added into the last 2-3 quarters generally. Therefore, looking at the opportunities what we are having, because at any time we are tracking about 30 to 35,000 crores of opportunities, and then 10,000 crores is a reasonable thing which we have projected to the investor community. That should be reasonably possible because in various areas, in power sector side, non-power sector side, infrastructure side, O&M side, also O&M has now today around 1,700 crores of opportunities we are tracking. Then the new plants happen when they are commissioned. For example, 500 crores of jobs which we have taken. So that should happen. And let us see, these targets, what we have got, 10,000 crores should be possible from that perspective.
Okay, sir. So within the Tasra mines, what was the total production during Q1? Hello?
Yeah, 1 minute. Around 1.5 million tons.
1.5.
Sorry, 1,50,000.
Okay, sir. Sir, we are guided for... Hello?
Yeah.
So we are guided for 300 to 400 crores of top line in this fiscal from MD business, whereas we have only 26 crores in this quarter. Can you throw some light on that?
This combines together we plan for 204 crores from the Tasra mine and 40 crores from the KPT mine. KPT mine just started the production and we are expecting to start the revenue from the Q3 onwards. From September, middle of the September we'll start, but ideally it will be from Q3 onwards we'll start generating this. Probably we'll touch maybe around 0.2 million, 30-40 crore of revenue will touch this year. And in the Tasra mine, because of the washery capacity availability outside is very limited, we are offtake arrangements as per the sales plan order only based on the availability of external washery. We are giving around 50,000 to 60,000 per month, depends on the sales direction we are executing. We hope that we are trying to push the sales team to take the material up to 170 to 1 lakh tons of per month capacity. We are asking them to looking at, and we are looking at the other alternative arrangement to outside any available external washeries availability is there. We are also pursuing that to speed up our offtake arrangements.
Okay, sir. Good answer the question. Thank you so much.
Thank you. The next question comes from the line of Noah from Flip Capital. Please go ahead.
Yeah, thank you for the opportunity. So how much of the gigawatt can be realistically completed by FY22 according to you, sir?
How many?
Of the gigawatts can be realistically completed by FY32?
There is your voice.
Yeah, I think the ongoing jobs, we are doing nearly 7,000 to 8,000 megawatts. Adani, Vedanta, and then the new jobs what we have taken from recently from Adani for the last couple of months. Therefore, this is on the execution side, both in the civil and structural side, and perhaps another 1,500 to another nearly 2,000 to 3,000 megawatts should be added in this year also.
Okay. Because utility companies are talking of a shortage of BOP bandwidth. So what is happening in terms of BOP bandwidth? Are new vendors being developed, or are they relaxing vendor norms now for the BOP?
No, our bandwidth is a very strong organization set up for execution. Our headquarters is there, our expertise there in construction, end-to-end construction solution, civil, structural, mechanical. on the complete segments. And we have got also experience in doing some of the complex jobs like cooling towers and also chimneys. For what we have to interface more is the engineering aspect of it. That is an important aspect which we have strengthened the people with very senior people we have taken from experienced groups, and they are assisting us. And now we are in the process of evaluating the projects and bidding it. And the other aspect is the procurement. The procurement is a second important aspect of the EPC work, and that also we have strengthened with a really experienced hands. And in fact, what I can say is that the EPC concept, what we are doing non-power sector, significantly has got a better presence in railways and roads. So already that type of experience is being gained by the organization. It is a question of integrating the procurement additional capacities required and then engineering interface, which we have to take with an engineering consultant, affordable in-house spend, and the existing construction spend. Of course, the technological part of the equipment supplies in many of the key packages like coal handling, ash handling, control instrumentation, and other things, as the engineering supply has to come to them, has to go to the various vendors. We are qualified, as per the CA guidelines, as per the main EPC contracts and guidelines. And those aspects will follow it up. We are already in touch with many of the key vendors in many key areas for the critical areas like coal handling, ash handling, water systems, and we have established a rapport with them and to see that once it comes, how we can work with them also.
Sure, sir. And so what is the status of FGD projects? Are FGD projects now happening, or are they going to be abandoned? What are the existing projects for FGD?
So far, out of the total orders, there is because of the government guidelines, shipping secretary landscape, estimate compliance timelines. These FGD projects, there is delayed, prolonged inactivity. So after discussing with the clients, whenever there is a non-moving to the extent of 4,264 crore worth of FGD packages, we moved from non-moving category and we removed it from the order book. And only 936 crore worth of UDP project, only one project only running, which we have considered in the order book value. And we are pursuing this FGD. We are pursuing with the client, and as and when the activity approvals received from the agency, we will take up these works. Till that time, we are keeping this under the non-moving category, sir.
Sure. Thank you very much. I'll come back in the queue.
Thank you. The next question comes from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening. Good morning, sir. Thank you so much for taking my question, sir. Hopefully, I'm audible.
Yes, sir. You're audible.
Yeah. Hi, sir. So just regarding our mining development operations, I could not get what you're saying about the segment, like the KPV, we are assuming around 30-40 crores, but in Basla mine, what do we expect this year, sir?
This year profit will touch around 150 crore, around 30 crore revenue, 120 to 150 crore between we will try to achieve the target. Mainly because this washery requirement, this package is including the washery they have allotted to us, and we are constructing the washery. Our washery will be ready by December 26. So till the time they have to do this washery outside the washery. So outside capacities are not available to do the washing. So only limited 50,000 to 60,000 tons per month capacity is only available outside washery. So we are their offtake arrangement they are taking only to that extent of mine quantity. So the projected we are pushing the department sale to take the more mining quantity, but because of the outside constraints they are unable to lift the more materials.
Okay. So is it fair to assume till our washery is not complete, we'll maintain around quarterly run rate of 20 or 30 crores? Is that like a fair assumption, sir?
Yes. That actually that we are pushing now further to increase to another 20,000-30,000 tons extra quantity. We are pushing them to take.
Okay, fair enough, sir. And with regards to our guidance, we've given a very clear guidance of 6,500 crores, but based on our order book, do we see any potential upside that can also happen to this order book, to the revenue recognition?
See, generally our company convert around 40% of its opening order book annually. We have around 14,000 orders in hand. Which translates to 40% into, we can easily achieve the projected turnover of 6,500 plus the current Q1 and Q2, the new orders, whatever we are getting, also we can able to convert into the turnover. So we are confident of achieving the growth because last year also we touched around 25% growth, and we are also projecting this year also 25% growth compared to the last year. More or less, we'll try to reach that number.
Okay, fair enough, sir. And just last question from my end. In the the other mine, the KCP mine, is there any constraint of washery or how that ramp up happens, sir?
No, the scope is only mining, sir. There is no linkage of washery to that, and it is the responsibility of the client to lift the material without linking to the washery. So we just touched the coal now, but because of the rains and all, we are not producing the coal now. We are shifting this to the next month. Maybe depends on the monsoon. We'll start the coal production by next month.
So, sir, for the full year FY27, what kind of revenue could we estimate? Approximately is also fine, sir.
Because this washery constraint is there for Tasra, so we can take average of 150 crore yearly basis for next year also, 150 to 200 between. And for the KBP, we can touch around 120 to 140 crore revenue.
Oh, okay, fair.
Both together around 350 crore we will touch next year.
Okay, and so mining, what margins do we get usually, sir?
So during peak rated capacity, both the plants, both the mines with peak rate capacity, weighted average of around 22% we are expecting. So because these are in the development phase now, once we reach the peak rate capacity by 28 onwards, we can touch around 22% weighted average. But till the time, maybe average of 15 to 16% level. Because washery is also not started in Tasra, maybe around 10 to 15% we can touch minimum, and depends on the readiness of the washery, it will go up to 22% on average.
Okay, fair enough, sir. Yeah, that's it from my side, sir. Thank you so much. All the best, sir.
Thank you. The next question comes from the line of Dinesh Kulkarni from Finsight. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible. Please go ahead.
Thank you very much, sir. And a really great set of numbers and the guidance you have provided. And my question is, see, we have seen MDO, the kind of businesses we have got is not many in the last, say, 2 years, 1.5, 2 years. So what's your specific outlook on these kind of businesses? How many are open for bidding now, and how large this could be in terms of order book, say, in the next 2-3 years?
So in terms of the MDO is concerned, we are planning to continue with these two only right now, and we are not thinking of bidding for any new further MDOs till the time we touch this peak rate capacity. And coking coal MDO 2 are there, and we are looking at iron ore, if any MDO is available, iron and ore side, we will look at that opportunity.
Okay, so is it because of our capacity constraint, or you think the business economics and the financial metrics are not equally lucrative? What's the reason?
No. This because we are new to the MDO business, and we want to first stabilize our existing business, and then we want to take up further business in the MDO.
No, I will add to what Arvind has said, Ramesh here. You see, as an opportunity, it is a huge opportunities is there. I think this we have touched upon a couple of times. For example, Coal India, that is called what is called the last mile, first mile connectivity is there. First mile connectivity is nothing from the mine side to the loading area, which includes the railway siding, the balancing facilities, and then the excavation facilities, and then this one. Ore excavation facilities, and then more important is the mechanization of the material handling. Coal India has got an investment of 53,000 crores. Now, that is how we know, for example, our initial experience, what we have taken as an EPC contract with Tyson Group at Kurmitar and Salvira, we are trying to gain certain experiences in doing execution also. Of course, MDO is a developer in these two projects, but as an opportunity, it will be there. As far as we are concerned, our capacity as on today 9 million tons. Perhaps down the line we can look at one more MDO based on how these two things shape up, and then based on the augmentation of our revenue and network, then we can certainly look at it. And it is definitely a lucrative business, and our work, our organization synergy is better because we can got a strong execution strength also, and then post completion we can do the operation maintenance ourselves. So that way it gels well with our objective. But business-wise, the opportunity can be substantial, both in the iron ore handling and the coal handling.
Okay, sir, that really sounds great. And one more thing, sir. You mentioned that only 5% of the revenue is from outside India right now. So around 90-95% is within India. So just wanted to understand the business profiles, in the foreign countries and Indian entities. Where do you think there is, in terms of like more opportunity with better margins? Because I believe there is some working capital constraint as well, right, in terms of number of days or receivables and stuff like that. So if you could just put some light on this, please.
International, sir, we are right now, earlier we used to do the ETC jobs outside, and we completed all the ETC jobs. And some of the countries where repatriation back, that money back to India is again the difficult challenges we faced in Bangladesh and some of the countries. So we stopped doing all ETC outside, and we are only focusing on the O&M business outside India. All Gulf countries and Nigeria, we completed the ETC, and we have just started the O&M service and manpower supply and overhauling activity, where we are getting good margins in O&M than the ETC. So we are more focusing on the ETC business at this moment. There are a lot of opportunities are available internationally, but we are pursuing based on the profile and client. So we are now bidding for one case of Fujairah, where material handling work we are now bidding along with the Tyson Group. So we are looking at the better opportunities, but at this moment we are only focusing on the O&M and overhauling works of the pipelines.
Okay, but where are the better payment terms, within India or outside? Like because I don't know how large our operations are there in terms of manpower handling and all that. Like, yeah. The payment terms I was asking.
The payment terms is good, sir. So the terms are because this O&M service, because they are continuing services which requires continued manpower, and also they are releasing payments within 30 to 45 days from the within 30 days to 45 days on an average they are releasing the payments.
Okay, so answer my last. Yeah, go ahead. Please go.
All these are operational plans, and there are no problems we are facing in terms of realization of bills are concerned. Maybe week 10 days delays, but we are getting the payments on time without any delay.
That sounds great, sir. And my last question is, sir, in terms of waterworks, like what's really happening in the industry? Because we've seen some of the other players are not reporting great numbers, and which is reflected in their stock price. Like it was not maybe the growth as expected as it was earlier, maybe like 2 or 3 quarters ago. So what's really happening in this, and what's your view and outlook there?
So these works are we are executing works in UP government where they are under Jal Jeevan Mission. There is a timelines which expired for the Jal Jeevan missions in November 24, and subsequently last budget also they extended the timelines. Subsequently, government center it's a 50-50. It's a state government 50% funding and central government 50% funding. From state side, because of the Kumbh Mela and all, they diverted their funds to the Kumbh Mela expenditure, and now subsequently during Q1 they released their portion of the money. But the allocation from central government, there is a delay. So there is a unless and until the central government funds released, the certifications and release of the bills, delays in the certification of bills are happening. And the PMO received a certain information that some of the states, they are
Hello.
Your
voice is breaking.
Your audio is not. You are not audible, sir.
So there are certain the reports they received, and some inquiries are going in some of the states that whether the funds are properly utilized and released or not, and all some issues are going on with some of the states. So the central business team already visited all the UP states, and they are giving in the form of report to this PMO office. Then they will release the funds. So we are hoping that Q2 probably some amounts, probably the government will allocate some funds to the UP government, and we'll expecting to receive the money by Q2 and Q3.
Okay, that really sounds great, sir, and all the best. Thank you very much.
Thank you. The next question comes from the line of Mahesh Patil from ICICI Securities. Please go ahead.
Yeah, hi. Hi, sir. Sir, a couple of clarifications. So the exceptional item you mentioned, what was the...
Interrupt. There is a lot of disturbance and your audio is not very clear.
Yeah, is it clear now?
Yes, it is better now.
Yeah, so the exceptional item you mentioned, sorry, I did not get it. You mentioned 55 CR as the PAT, right? Adjusted PAT.
Yeah, PAT.
Okay. Can you give to the top line, the revenue impact of that? What was that exact number?
288 crore is the top line.
288. Okay. And this is one time, right? Next quarter onwards, this won't be there, you said.
Yeah. So there is a seasonal quantity which we got in the first quarter from the unpaid royalty from the client and some of the vendors, that we collected extra royalty as a penalty that resulted in more revenue. That resulted more PAT.
Okay, so 288 CR is the revenue and 19% EBITDA margin, right?
No, PAT margin.
PAT margin 19. Okay. Okay, sir. And sir, just want to understand, in the base quarter, Q1 last year, did we have any FGD orders in our inflow?
Yes, that we had. No.
Okay.
Investment is going to come down with the recent Supreme Court order. But more of opportunities will come wherever power plants are installed near the cities. Tier 1 and Tier 2 cities.
Right. And this one order that you mentioned, apart from this 4264 crore of 946 CR, right? So that is currently ongoing, the execution?
Yeah, this year we will complete that order also.
Okay, this year will complete. Okay. Okay, sir. Yeah. Thank you.
Thank you. The next question comes from the line of Bhagwat from Prosperity Wealth Management Private Limited. Please go ahead.
Thank you for the opportunity. My question is regarding the income tax rate. For the quarter, it seems to be comparatively higher. Could you please comment on this and provide an estimate for the full year tax rate for financial year 26?
See, the exceptional revenue what we are generating from the riverbed minerals, we floated from LLP. LLP tax rate is at 35%, whereas the company rate is around 25%. So because of the exceptional profit we realized from the LLP, we provisioned for the 35% tax on that. So that resulted 4% overall on the turnover.
Okay. So I have not got a clarity on that. You mentioned the one-off transactions. The 288 you mentioned the revenue and 55 is the tax on that. Is that correct?
Yes, correct.
So the total tax that is reported is 81 crore on the consolidated level. This is not getting reconciled actually. Could you please help me understand that?
See, the LLPs what we are standalone is around 49 crore of PAT we recognize.
Right.
Consol is around 80 crore of revenue. 80 crore is the PAT. 81 crore is the PAT we recognize.
Yes. Out of that 81, what is the one-off portion of that?
81, sorry, your question?
Out of the 81 crore total profit reported, what is the non-recurring part of that?
Non-controlling interest you are saying?
No, I am asking out of that 81 crore, what is the one-off item that is included? You mentioned 55 crores. Is that on PAT level or EBITDA level? That is what the query is.
So yeah, 40 standalone we touched around 49 crore, and there are some certain overseas projects. 12 crore loss is there in one of the overseas projects, so that resulted the lower PAT. So 55 is from the LLP. 15 crore loss we recognized in the Mech FJD, one of the international project. So remaining all are from 80 crore overall net to net effect is 80 crore, 81 crore.
Okay. So my yeah.
There is SPVs, subsidiary MDOs are also there. So their nominal profits we realize, and only except that because of 15 crore of losses there in the overseas that we added to that, and net effect will be 81 crore is the PAT for the console number.
Okay. My second question is regarding the borrowing. So could you please update first the total borrowings as of Q1 and the blended interest rate on the same?
Right now the working capital our utilization is around 600 crore is our limit. Around 543 crore of utilization is there overall. And overall, including equipment loan and other borrowings altogether around 753 crore. 753 is there. 753 is the total gross debt.
Okay. And the interest rate on the same?
Interest rate for equipment loan it is around 8.5%, but working capital it is average of 9.2% interest rate.
Okay. Understood. Thank you so much.
Thank you. The next question comes from the line of Vinay from Heartway Investments. Please go ahead.
Yeah. Just a couple of questions on this waterworks. What is the total outstanding as of date?
300 crore we are supposed to receivable is in the form of receivable is around 230 crore, and 100 crore of uncertified revenue is there. So around 330 to 340 crore roughly is the outstanding overall. Standing pending certification plus receivables together.
Okay. And unexecuted contracts are how much in this?
Around 65%. So around 1,000 crore will be roughly the unexecuted value is there. So out of 3,000 crore.
Okay. So 1,000 crore is unexecuted, and the amount which we have received in Q1, total amount?
Around 70 crore.
And did we execute anything during this quarter?
Yeah, we are executing on the pending certification from the department. Unless the allocation of fund is there, they are not certifying the bills. It is in the form of WFP bills are there.
So we have gone slow, or we are continuing with completion of our project?
So, if you look at my working capital utilization, that gross debt has increased mainly because of this. We are pumping money to the projects, and we are trying to conclude the entire work during the current year. And we want to bring this majority of the gram panchayats into the O&M operation so that we can generate more revenue in the O&M operations. So we are focusing to conclude the entire activity around 208 crore of 215 crore value of works we are trying to 215 panchayatis we are trying to close this year.
So 1,000 crore will be added in this year, you mean to say?
Depends on the certification from them, so we are pushing them, sir.
Okay.
If the government allocates funds immediately, it will happen this year. Otherwise, it will take to next year.
So just one last question. On the fresh execution this quarter, you are saying the unexecuted, the unbilled revenue plus billed revenue would be how much, roughly?
350.
Okay.
And pending total as of today.
Okay. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, in the interest of time and no further questions, I will now hand the conference over to the management for closing comments.
Yeah, Ramaya again, thanks everybody. Thanks, Arvind, for the various aspects what you have given the finance and other aspects. I think, as I said, 10,000 crores is the target what we get that should enable the company to increase the backlog substantially. The ongoing MDO jobs will come more on streamline and that will increase the revenues. And apart from the power sector business which is looking up with the opportunities what has been brought out, there is a new segment which we are also looking into the battery energy storage because as you know the government of India plans to enhance the green power both in the pumped storage and the battery storage. They are required to take care of the energy imbalance in by 2030. They are planning to add at least nearly about 40,000 megawatts. And certain projects we are looking at as an opportunity in the battery energy storage. Recently, our people had gone to China also because the types for the battery supply and all. So that is an important segment. The rest of the integration and then execution and putting up on the financial engineering inputs required is there. We are also looking at it. And as I said earlier, the green power first initiative what we have taken in Bihar under Kusum projects that has come. For the future focus is the battery energy storage, pumped storage, and then the continued focus on the solar power and wind power. And that will be an area of business interest for us also. And of course, the existing strength and the ongoing things what we are doing in the power sector will continue to be there with our leadership in that, both in the installation side, civil side, and the O&M side. And the non-power sector, where we have clearly established our presence and also our experience in the railways and roads and metro projects, will continue to play. Therefore, there is a wide basket of opportunities available with the continued investments coming up. I think this year the overall investment of about 11.2 crores is the central government allocation for the infrastructure, and that should go out increase the pace in the coming years also. Therefore, what is expected is about 147 lakh crores of investment is expected to come in the next 5 to 7 years by the central government alone as part of a continuation of national infrastructure pipeline. And we are into many aspects of the infrastructure business apart from the power sector business also. That should help us into see that our growth momentum is maintained. Thank you.
Thank you. On behalf of Nirmal Bang Equities Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your line.
Thank you.